These 10 credit lines will help you increase your score. After running a credit repair agency and helping thousands of clients rebuild their credit from the ground up, I've seen firsthand which credit lines can make the biggest impact. Let's face it, building or fixing your credit can feel like climbing a mountain, especially with a low credit score. Without good credit, it's much harder to get a car loan or rent an apartment, but that's where Credit Strong can help. So if you've been looking for ways to boost your credit without jumping through hoops like hard credit checks, this might be the break that you've been waiting for. Credit Strong is a fintech company that focuses on one thing: helping people with less than perfect credit build it back up. And they do it through their credit builders, which are perfect for anyone struggling to improve their score. What set Credit Strong apart is that you don't need good credit to get started. There's no credit check required, and you can apply in just a few minutes. They offer 5 personal credit building plans, but the 3 that we are going to focus on is going to be Install, CS Max, and Revolve. Starting with Install, it's the most straightforward credit building plan. It helps you establish installment credit by making fixed monthly payments. You can choose your loan term, payment amount, and credit size. This makes it super flexible because you can pick what works best for your budget. This is ideal, especially if you're starting your credit building journey and need a consistent, manageable way to build up your score over time. For those who need a bigger loan and want to prove that you can handle more financial responsibility, there's CS Max. CS Max is useful if you want to improve your debt to income ratio. It also helps you if you want larger credit lines in the future. It's a solid option for anyone who needs to show that they can manage larger loan amounts. Fees for Credit Strong plans range from $49 to $199 per month, depending on the loan amount and plan that you choose. Credit Strong helps you build a good payment history. But here's the thing: miss a payment and it can drop your score fast. A single missed payment can stay in your credit report for up to 7 years and cause your score to drop by as much as 100 points. So you gotta stay on top of them. The good news is that you can cancel at any time without a penalty, and you get your deposits back minus any interest. Lastly, we have Revolve, which helps build revolving credit. This is important because revolving credit, like credit cards, hold a lot of weight on your credit score. What's great about Revolve is that it improves your credit utilization ratio, which is the second biggest factor in your credit score. The annual subscription is $99, and while it's not a credit card, it mimics the impact that responsible credit card usage has on your score. This will add a $1,000 credit line to your credit. You can bump this to $3,000 if you add a monthly savings. One of the biggest problems that people face after building up their credit is knowing how to use that improved score to actually improve their life. Building credit is important, but what if you can also learn skills that lead to better jobs, promotions, or starting a business? And you can improve your credit too. That's where Kovo Credit comes in. Kovo Credit helps you tackle both challenges of credit building and career development at the same time. They offer a simple $240 loan that doesn't require a credit check. This makes it super easy to access even if your credit isn't in the best shape. But Kovo doesn't just help you build credit, it also offers online courses aimed at personal and professional development. So in exchange for the loan, you get access to courses on a range of topics like interview skills, entrepreneurship, and self-confidence. Let's break down why Kovo might be the perfect next step for you. You can sign up with no hard pull on your credit, so it's accessible even if your credit is currently low. There's no interest added to the loan, so you don't have to worry about extra costs piling up. Next, you're not just borrowing money, but you're actually gaining valuable skills that can help you with your personal and professional life. One thing that I really like about Kovo is that if you're not filling the courses, Kovo will give you a full refund within 30 days. So there's no pressure if you change your mind. Now, there are a couple of limitations to consider. The loan amount is capped at $240, which might not be enough if you're looking for a larger credit boost. Also, the loan can only be used to access Kovo's courses. So if you want to use it for something else, then this won't work. Up next is another powerful option that has helped thousands of people improve their credit. What's interesting about this one is that you don't get the money up front, yet it's one of the most reliable ways to build credit. Let me break it down. Self offers what is known as a secure loan or credit builder loan. Unlike regular loans where you get money immediately and then pay it back, this type of loan works a little bit differently. With a credit builder loan, you don't get access to the money right away. Instead, it gets locked up to a savings account until you made all of the monthly payments. This might sound like a downside, but it actually helps you build credit with less risk because you don't have the temptation to spend the loan money right away. With Self, the money that you're borrowing is held into a savings account or a CD, which is a certificate of deposit, and it stays there until you made all of your payments. So let's break down this process step by step. First, when you sign up with Self, the company opens up a separate account, a CD, on your behalf. Each month, as you make your payments, Self reports them to the 3 major credit bureaus: TransUnion, Experian, and Equifax. Consistent reporting helps build a positive payment history, which is one of the most important factors for improving your credit score. When you've paid off your loan, Self unlocks the money from your account and gives it back to you, minus any interest and fees. With Self, there are a few fees to keep in mind. You'll be charged an upfront admin fee, as well as up to 15% interest on your loan. Also, you gotta watch out for late fees. Missing even one payment can set you back all the progress that you made. For example, if you were to choose a 24-month plan where you pay $25 a month, you end up paying a total of $600 over the course of 2 years. Once your term is complete, you get back around $520. After subtracting fees, the total cost comes around $89. This loan creates an installment line of credit on your report and can greatly increase your score if it stays open and in good standing. Now, if you already have an installment loan like a car or a student loan, don't expect a new one to boost your score much. So a major problem with building credit is finding a reliable, low-interest revolving line of credit, because it is tough to find one without a credit check. But there is a way to build credit without worrying about those hurdles. That's where Kickoff comes in, offering both a revolving line of credit and installment loans to help you improve your credit score. Kickoff is unique because it offers a revolving line of credit like a credit card. This can help you with your credit utilization, which affects your credit score. So depending on which plan that you go with, it will determine how large of a credit limit that you'll get. At $5, you get a $750 credit line. At $20, you get a $2,500 credit line. And at $35, you get a $3,500 credit line. Now, this isn't your typical credit line where you can just go out and buy whatever you want. You're essentially just financing the credit builder plan itself, so the money stays within Kovo. But the key benefit is that this low utilization rate can help you raise your score without requiring you to spend a lot. With Kovo's premium or ultimate plans, you also get the added benefits of rent reporting. This means that your future rent payments will be reported to Equifax, helping you build credit just by paying your rent on time. And here's the best part. They only report on-time rent payments, so there's no risk of damaging your credit score if you miss a rent payment in the past. For a one-time fee, Kickoff can also report 24 months of past rental payments as long as they are verifiable. This instantly adds up to 2 years of positive payment history to your credit report. In addition to revolving credit, Kickoff also offers a credit builder loan. This adds an installment account to your credit report, giving you another opportunity to improve your credit score by showing that you can handle different types of credit. For just $10 a month, you can set aside that amount for 12 months. Once the term is over, you get that money back, making it a risk-way free to build credit. A few things to love about this loan is that there's no credit check, no interest, and you can set it up all quickly through the Kickoff app. It's straightforward and hassle-free. But if you're looking for a higher credit limit and a way to leverage something that you already own to build your credit, the next option has a special solution that might be perfect for you. That's where Yendo comes in. Yendo allows you to leverage your car title to access a credit card. As long as you own the car outright and have the title, you can use it as collateral for a credit card with a limit anywhere between $450 to $10,000. The exact credit limit that you qualify for depends on a few factors, like the car's make, model, mileage, and condition, along with your ability to make the monthly payments. Once approved, Yendo reports your credit line to the major credit bureaus. Since it is a revolving line of credit, similar to a credit card, it helps improve your credit utilization ratio, which plays a big role in raising your credit score over time. The approval process is simple and fast. You can apply online or via the Yendo app, and it just only takes a few minutes. Plus, there's no credit check involved, so you won't have to worry about your score taking a hit just for applying. So once you enter your personal details and share information about your car, Yendo provides you with a pre-approval offer in just minutes. Now, Yendo does charge a $40 annual fee and has a fixed APR of around 30%, but when compared to traditional title loans, which can have interest rates as high as 300%, this is significantly more affordable. If you ever find yourself struggling to make payments, Yendo is flexible and willing to work with you to find a solution, so don't hesitate to reach out if help is needed. While they do have the right to repossess your car if you stop making payments, that's their last resort. So be mindful just to use this just as a credit building tool. Yendo is a solid option for anyone with bad credit or no credit at all. It's a unique solution that can help you boost your credit score while making your vehicle work for you. One of the most frustrating parts about building credit is that so many of your regular on-time payments don't even show up on your credit report. You could be paying your bills like clockwork, but your score doesn't reflect it. Fortunately, there is a way to fix that without taking on new debt or applying for another loan. That's where Experian Boost comes in. It lets you get credit for paying your everyday bills on time, something that can quickly give your score a boost. Now let's break it down on how it works. The idea is simple but effective. When you link your bank account, Experian Boost checks on your on-time payments for things like utilities, streaming services, and even rent. Normally these types of payments, things like your electric bill or Netflix subscription, don't get reported to the credit bureaus. That means that you've been making payments on time, but your credit score doesn't reflect it. That's because it costs companies money to report your payments to the bureaus. Most don't bother unless something goes wrong, like you miss a payment, which is why some of these positive payments often don't show up on your credit report. It's one of those odd things about the credit system. Doing the right thing doesn't get you rewarded, but making a mistake can hurt your score. But with Experian Boost, that changes. It only reports your on-time utility payments, so it helps your credit score without penalizing you for any late payments. Getting started with Experian Boost is super easy. Sign up at Experian.com and create an account. Link your bank account, and Experian will automatically look for qualifying payments, things like utilities, subscriptions, and rent. Then sit back and watch your score improve as these positive payments get added on to your Experian credit report. And don't worry, you can opt out at any time if you feel like it's not helping or if you are planning to apply for a large loan soon. Best of all, it is 100% free, so there's no cost to start boosting your credit score. Also remember that it only reports on-time payments, which will help you build a strong positive payment history. Keep in mind though that Experian Boost only affects your Experian credit score. So if a lender checks your Equifax or TransUnion score, those boosted payments won't show up there. This next credit line will report to all three. If you've tried to get a traditional credit card but you were denied, you know how frustrating it can be. But what if you can get all of the benefits of a credit card without needing to worry about your credit history? That's where the Tomo credit card comes in. While Tomo might be called a credit card, it actually works more like a charge card. This means that you can't carry a balance from month to month. You have to pay it in full. Now that may seem limiting, but that's actually a great way to build credit responsibly without falling into debt. Approval for the Tomo credit card is super simple. They don't even look at your credit history, so whether you have bad credit or no credit at all, it doesn't matter. All you gotta do is link your bank account, and then Tomo will analyze your financial activity and set your credit limit. Depending on your transactions, your credit line can go as high as $30,000. They also recently launched a new tool called Tomo Boost. It's an AI-powered credit engine that helps you manage and build your credit even further. Tomo Boost offers several plans starting at $14.99 per month and going all the way up to $129.99 per month. If you want to save, they also offer discounts for annual plans. No matter which Tomo Boost plan that you choose, you can get access to credit lines ranging from $1,000 to $30,000. All of the plans include helpful features like bill tracking, credit monitoring, and no hard credit pulls during the application process. As you move up to the higher tier plans, you unlock additional features like the ability to dispute negative accounts on your credit report and also rent reporting, which can further improve your credit. While Tomo helps you build credit responsibly by requiring you to pay off your balance in full every month, what if you had a card that uses AI to automatically manage your credit, protecting your spending and ensuring that you never overspend? That's where cred.ai steps in. Cred.ai combines the benefits of a traditional credit card with the security of a deposit account, all powered by AI. This approach helps you build credit while keeping your spending under control. Plus, cred.ai partners with a real bank to report your account activity to all three of the major credit bureaus. Here's where it gets interesting. When you sign up for cred.ai, the credit bureaus will see a $1,500 credit limit on your report, which can positively impact your credit utilization and boosting your score. However, your real spending limit depends on how much you have in your linked deposit account. While the $1,500 limit does look good on your credit report, you can only spend on what you already deposited, meaning that there's no risk of going into debt. What makes cred.ai even better is that there's no fees, no interest, and no chance of missing a payment because you're always using your own money. Here are a few features that make cred.ai stand out. You get access to your paycheck up to 2 days earlier, giving you more control over your cash flow. And if you're worried about online security, cred.ai lets you generate one-time virtual cards to protect your personal information when shopping online. Have you ever faced a random decline? I know how annoying that can be. Cred.ai allows you to pre-approve transactions so you know that your purchases will go through smoothly, putting you in control of your spending at all times. For cashback or rewards, there are better options, but if you want to build credit safely, cred.ai is a good choice. While cred.ai offers a smart AI-powered way to manage your credit, if you're looking for a way to boost your credit in a short time, Ava is another solid option. Unlike most credit cards, the Ava Credit Builder card isn't meant for everyday purchases. Instead, it focuses on helping you improve two of the most important areas of your credit: credit utilization and payment history. With a $2,500 credit limit, the Ava Credit Builder card helps you keep your credit utilization low by allowing you to spend just $25 a month on eligible subscriptions like Amazon Prime, Netflix, or your cell phone bill. And this low utilization helps you with your credit score. Each month, the $25 subscription payment is automatically deducted from your linked bank account, making sure that you're always paying on time. You're required to pay in full every month, so there is no risk of debt or interest charges. Ava reports your payment activity to all three major credit bureaus every week, ensuring that your positive payment history shows up quickly to help you with your score. In addition to the low utilization strategy, Ava offers a feature called Save and Build Credit. Here's how it works. You can deposit anywhere between $25 to $100 a month into your Ava wallet over 12 or a 24-month period. This helps you build your payment history and adds another type of account to your credit mix. By making these regular deposits, not only you're strengthening your payment history, but you're also diversifying your credit profile. Ava charges a small membership fee of $6 a month if you go with the annual plan, or $9 a month if you prefer to pay monthly. That brings the yearly cost between $72 to $108. While Ava helps you boost your score by focusing on low utilization and payment history, what about those rent payments that you've been making on time? If those aren't being reported, you're missing out on a huge opportunity to improve your credit. Fortunately, rent reporters can turn those regular rent payments into a credit building tool that could finally give your score the boost that it needs. Rent reporters allows you to report your on-time rent payments directly to the major credit bureaus, something that most landlords don't do. One of the standout features of rent reporters is their VIP service, which lets you report up to 24 months of past rent payments in just 3 to 5 days. That's 2 years of positive payment history added to your credit report almost instantly. If you've been renting even longer, you can go back to 48 months. Simply submit your payment history from both your current and previous landlord. Getting started with rent reporters is pretty straightforward. You sign up by providing your social security number, date of birth, and landlord's contact info. Rent reporters will then contact your landlord to verify your rental history. You will also link the payment method that you use for rent, whether it could be your bank account, Venmo, or Cash App, just to make the verification easier. Once everything is verified, rent reporters will submit the rent payments to the major credit bureaus, and they will appear on your credit report as RR/residents. As long as your subscription is active, rent reporters will report your on-time rent payments every month. There are 2 membership options to choose from. They have a monthly plan that there's a one-time enrollment fee of around $95 followed by $10 per month. Then there's an annual plan where it comes out to be around almost $200 for the year. But just always double check the website because they always run promotion. You can also offer add-ons like expedited reporting or a roommate discount. With all the extras, your total cost could reach around $200 a year, which is higher than some competitors, but it may be worth it for the fast reporting and potential credit boosts. One major benefit is their 7-day money-back guarantee. If you're not satisfied with the credit boost after the update, you can request a refund within 7 days. Just keep in mind that if you do request for a refund, the rent reporting entry will be removed from your credit report. Throughout this video, I shared various tools to help you build your credit, whether through revolving lines, installment loans, or rent reporting, but choosing the right credit line for your situation is key. Picking the wrong one can leave your credit flat or even hurt it. Let's dive into how to make the best choice for your credit profile and avoid common mistakes. To strengthen your credit, it's important to understand 3 main types of trade lines. First is revolving credit. This includes things like credit cards, where your balance can vary each month. Keeping your credit utilization low on revolving accounts can significantly boost your score. Second is installment credit. These are loans with a fixed monthly payment, like car loans or mortgages. They help show that you can handle consistent payments over time. And third is other trade lines. This includes non-traditional credit accounts like rent and utility reporting, which can add diversity to your credit profile. To create a strong, well-rounded credit profile, it's important to have a balance of these different credit types. This shows lenders that you can handle various forms of credit. Typically, having between 3 to 7 credit lines reporting at any time is ideal for most people. However, it is important not to overdo it. If you already have multiple credit cards, you don't need to add more revolving accounts. Too many revolving accounts can actually make your credit harder to manage and put you into debt if not handled correctly. The same rule applies to installment loans. If you already have a mortgage, auto loan, or student loan, adding another installment loan like a credit builder loan won't add much benefit. Instead, focus on balancing other areas of your credit. One area that most people overlook is rent and utility payments. These often don't get reported, but by adding them as trade lines, it can diversify your credit profile and give your score a huge boost, especially if you already have revolving and installment lines of credit. Now that you understand the types of trade lines, here's a breakdown of the best companies to consider based on the types of credit lines that you are looking to add. If your credit mix lacks revolving accounts like credit cards, adding one can improve your credit utilization ratio, a major factor in boosting your score. So consider these options: Kickoff, Tomo, and cred.ai. If you're missing an installment account like a loan, adding one can strengthen your credit mix and show lenders that you can manage fixed monthly payments. Here are some solid options: Self, Credit Strong, and Kickoff's credit builder loan. Many people miss out on reporting their rent and utility payments, which can add diversity to their credit profile. Adding these trade lines can make a huge difference, especially if you already have revolving or installment lines of credit. So consider these ones: Experian Boost, Rent Reporters, and Ava Credit. But there's one crucial thing that I didn't cover in this video. All of these strategies are powerful, but they won't work as well if your credit report has errors or negative marks. The first step in any credit building strategy is to fix those issues. If you want to fix your credit and remove negative marks in under 10 minutes, click this video right here and I'll show you how to use my DIY credit repair software. It's simple, fast, and can be done from home. I'll see you over there.